Stocks advanced today and the dollar steadied below a recent peak ahead of U.S. inflation data that some strategists say could offer another signal that inflation has peaked. Now, MSCI's broadest index of Asia Pacific rose at 0.8% and led by a 2.6% jump for South Korea's Kospi as Japan's Nikkei stay on at 0.2%, where S&P 500 futures and Nasdaq futures held firm while European stock futures dipped, setting the stage for a subdued start for European markets. The MSCI gauge has risen for 4 days in a row, bouncing back from two-year lows. Analysts, however, warn that U.S. core inflation is likely to march on and that the near-term rate implications are unclear. Meanwhile, the dollar eased further on Tuesday ahead of U.S. inflation data that could show some signs of softening, while the euro found its footing above parity on hawkish comments from policymakers that rates would need to increase further. The dollar index, which measures the greenback against a basket of 6 currencies, including the euro, eased at 0.2% to 108.06 after falling 0.7% on Monday, the largest daily decline since August 10. The euro rose at 0.2% to $1.014 after hitting a nearly 1-month high of $1.0198 in the previous session. The yen likewise eked out gains and last traded 0.4% higher at 142.29 per dollar, helped by comments from officials signaling the government could take steps to counter excessive yen weakness. Further stories now. UK's jobless rate hit its lowest since 1974, but the drop was subdued mostly to a fall in the size of the workforce, and there were other signs that the country's jobs boom is declining, adding to the Bank of England's inflation headache. The Office for National Statistics said the unemployment rate sank to 3.6% in 3 months to July. Economists had expected it to hold at 3.8%. However, the fall was not a sign of health in the UK's economy, which is at risk of a recession. Meanwhile, the Bank of England is worried that tightness in the labour market will add to the recent surge in price pressures.